We've just seen the ONS UK House Price Index for September release, showing house prices up 11.8% year over year, demonstrating the strong market. More recent data from Rightmove, the property website, suggests that average house prices this month, November, across the UK dropped by over £2,000 compared to October's reading in what was the largest monthly decline since January this year. What's 2022 looking like? Well, joining us now on today's IG Trade in the Markets podcast is Jeremy Leaf, a long-standing London estate agent. He was the founder of Jeremy Leaf and Company Estate Agents back in the early 80s, and he is also a former RICS residential chairman. Jeremy, it's good to catch up with you again. Now, clearly this ONS data is a bit more backward-looking than Rightmove. Rightmove brings the numbers a bit more up to date. As someone in the market, as you are, what's your message?
Well, yeah, the figures are interesting. They always are because they show different things at different times, and they'll be a useful benchmark as we look forward because they are the most comprehensive of all the market surveys, and it's so difficult for people to interpret these figures. And it's showing the frenzy that was going on, and we certainly saw it in our marketplace and in the high street as people struggled to take advantage even of the smaller stamp duty concession that was available up to the end of September. And of course, things have changed since. The market has settled down a bit, and it demonstrates as well how many people brought forward those buying decisions, but there's still left plenty of activity for others.
What about the demand-supply balance? Because my understanding is earlier in the year, there were insufficient numbers of houses on the market, which was helping push prices up.
You actually hit the nail on the head there, Jeremy, because supply has been the issue right the way along, even since the pandemic that started and the lockdown restrictions began to ease. Supply. That's always been the problem. Not enough to meet the demand of the types of property that we aspired to, and in the areas we all wanted to live. And that has helped to also underpin that price growth that we saw right up to the end of September, which these figures show.
So who's buying in your experience? First-time buyer market strong or not? What's the rental market doing? And are we seeing a continuation of what we saw during the pandemic as an uptake in upmarket properties with space?
Yeah, I think it's a little bit of everything. There's not one sort of category that we've found that has stood out. I think particularly if you ask me to put my money on it, it's more those existing homeowners who've built up equity over the years, more cash rich, better prospects perhaps for lenders as well, who've been flexing their muscles in the market and trading up and taking those longer term buying decisions, whether it's driven by schools or it's, as you say, looking for more space. But a lot of it, another fundamental part was working from home, of course, and working arrangements, because commuting, the balance of commuting, it changed so rapidly in that period. It brought forward things. A lot of people said the pandemic changed nothing, accelerated everything. And I think there's a lot of truth to that. And as people's working environments and commuting changed, they wanted property to reflect that. Some more temporary than others, and I think now it's largely settled down, a lot more settled than it was. Unfortunately, the pandemic is still out there, but now that furlough, for instance, has ended, people are clear. A lot of people are clearer about where they're going to be working and for how long.
In addition to the retail market, the resale, you're also involved in new housing developments. How is the new property market compared to the resale market?
Yeah, that's another interesting one, because we've heard, of course, partly as a fallout probably from Brexit, the shortage of materials and the cost of materials and labour going up, which is a trend which started a long time ago, and now, of course, things have come to a head. And we were talking, only just now, the inflation figures. Very recently, inflation figures have come up, so we can see that in issue really showing up in building materials. So that is, as far as the housing market is concerned, that's translated itself into people not wanting as much to do properties up, because they know how much longer it's going to take, how much more it's going to cost, and how much disruption to their lives are. And that in turn has had a knock-on benefit to new home sales. I mean, you can see the house builders figures have been very strong. I'm sure you track that very, very closely, as I do. And I'm sure that they've benefited from that disruption and delay, because people know that when they're moving, they're more likely, not always, of course, are more likely not to have to worry about builders coming in and the cost of materials and labor.
Well, let's pick up on that point about the strong inflation data, which, as you say, out today on consumer, producer, and retail prices, showing a stronger than expected growth across all areas. So we know that inflation is becoming entrenched. You talk about how it affects the building materials part of this market, but generally speaking, how does it affect the resale market? Does it mean that people are reluctant to move if they have to take on more debt? Clearly, this is all to do with the Bank of England interest rate decision as well, expected in the next few months or so. Some suggesting we could well see something like around about 100 basis points of rate rises coming down the pipe sometime in 2022. Is this likely to derail what we've seen from the ONS today of this 11.8% year on year over year strong housing market to September?
Well, not so much really, because of course, so many people have fixed rate mortgages, and we find a lot of our customers are in that boat. So they don't want to lose those. Those are new to the market, and I read recently it's around 20% might be first time buyers or people having variable rate mortgages, or just not able to take advantage. Of course, they will be wanting to secure their loans as much as they can, because most people expect that rates will go up. So it's going to have a limited effect on most people, but it's the impact is more on confidence. You know, the old story, confidence takes a long time to come. It goes very, very quickly. And if the direction of travel for interest rates is up and up and up and up, that is what's deterring people, particularly those on limited budgets, especially first-time buyers, of course, when they find it much more difficult to budget for changes in their expenditure. And they'll be worried about how far and how fast interest rates are going to go up. And that will affect, of course, buying decisions now.
Mm. Just looking back, what did the return of full stamp duty do to the market, in your opinion?
Of course, it was well trailed in advance. Before the first change in July, not everyone was expecting it to be extended, and it was, and there was plenty of criticism for it. The second one, there was talk of it being extended, but it didn't happen. I think people felt that the housing market had received enough benefit and didn't need any more stimulus. So the impact has been relatively little, limited, because there's still this pent-up demand for people to move. And I think that coincided, what we found on the ground, coincided with clarity on employment situations and locations when the furlough scheme ended. So people's idea of where and when they'd be moving and for how long, that made a decision to their house moving decisions.
What about the cladding crisis? That's something else that happened this year. The cladding crisis, obviously, for apartment blocks. How did that twist the market, or did it not really have too much of an effect?
Yeah, well, one thing actually I should touch on, of course, although there was so much more demand and prices went up, it was very much a two-tier change, in that it was more demand for housing as opposed to flats. And flats without outside space also found they certainly didn't increase in price as much as those that did. And the cladding crisis only compounded that problem. A lot of the properties which could not be sold and brought forward to the market with or without outside space reduced that supply, and also helped to increase prices of those which were available. And I think if it can be resolved, even those which with relatively little suspect cladding, it will make a considerable difference to the market, and for those especially who are finding it difficult to get onto the housing ladder.
As a former RICS residential chairman, and as I say, someone intimately involved with this market, do you see a simple solution to the cladding crisis, do you think? Or, I mean, is the government overcomplicating it, or is there really a deep-seated worry, concern, and insoluble point of all this?
How long have you got, Jeremy? You know, I'm not sure this show goes on that long, but I'll try and summarize it. I think there's a lot that can be done. The low-hanging fruit we can grab in terms of training of those. There's a huge shortage of engineers, people who are prepared to put their necks on the line, and there's so many issues arise from the housing market. It's the lenders' stance on these things. The lenders really do control the pace and the price of property, the pace of sale and the price of property, and their stance in terms of cladding. And we've seen many instances where there's been really absolutely nothing or virtually nothing involved, and the lenders are just being so cautious. And even when experienced engineers and surveyors have given it clean bill of health, we've seen properties turned down because of just ultra caution. And I think if we could see more direction on those, at least at the beginning of those with very, very minimal cladding, and even some have maybe not even suspect cladding, being sold and freely and readily, then that will have a big effect on the rest of the market. It will help to release a lot of properties. It will stop a lot of anguish of those living there, and we can then start to address the more serious problems where there are potentially a lot more problems in the blocks. But it's a lot of it is the training and the understanding of what we have and dealing with that, but particularly those with relatively minimal cladding, which we start with, and very earnestly.
Yeah. Okay. One final question has to be 2022. How are you feeling about next year in the house price market generally?
Well, we are seeing an increase in supply. There is more property coming on, but nowhere near enough to satisfy demand at the moment. I think demand will go down a little bit more because interest rates almost certainly going to go up. There still seems to be many people who are living in what they consider unsuitable properties and unsuitable relationships, for that matter, who are keen to move, and they're actually enjoying the ability to do so in less frenzied conditions that we saw in the last few months, up to the end of September. So I still feel there will be considerable demand. I think prices will be underpinned by the shortage of stock, even though, as I say, it's improving. But there will be that much more caution, and I think a lot of it will be determined by the strength or otherwise of the economy. If inflation can be controlled and employment prospects have been very good or relatively good, that will help to build confidence about taking on debt.
Okay, Jeremy, I have to leave it there, but thank you so much indeed for joining us. It's a pleasure to have so much of your time in your busy day. Jeremy Leaf, founder of Jeremy Leaf and Company Estate Agents in North London, and also a former RICS residential chairman. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.